Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES pulled back to 2080.75, and at that point, responsive buyers stepped in and pushed ES back up towards the recent range high. And if we look at the last three sessions, which are, yesterday's session was really a holiday session, you can see that there's a pretty clear sideways range that the market has established. And overall, we know that the market's trading near the all-time highs, and we are in a bullish context. But essentially, this is the small balance area that we're working with right now. So within that balance area, 86.5 to 88.5 is a short-term support zone. And as long as the market holds above that zone, we know that buyers can maintain firm control, and it can lead to a upside breakout above 93 to 95, targeting a move up to 99.75 to 2101.75, and potentially higher. Above 95, there really is no hard resistance. So at that point, it's really going to depend on the type of momentum and volume we're seeing in the market. If we're seeing light volume, then we can expect a less of a range, and that means that the market may only get up to 2099.75 to 0175, and not really have enough to really go too much beyond that zone. But just keep in mind that the resistance zones above are not hard resistance areas. These are simply areas where the market could become short-term exhausted, and we can see the market pause, or we can see some profit taking up there. But those are not hard resistance zones. On the downside, a break below 86.5 to 88.5, wouldn't necessarily shift control, but it would just be an indication of short-term weakness. Buyers can still be active at 79 to 81.5, and this is really the key support short term. That's essentially the bottom of the recent range, and as long as buyers hold it above 79 to 81.5, again, we would still be in a bullish context. Now, in the event that we start heading lower and we actually break below 79 to 81.5, that would be a break below this recent range. Again, because we're in a very bullish market, it doesn't mean that we have to liquidate, on the downside. But if we're going down on weak internals and a lot of momentum, then a break below 79 to 81.5 could lead to a test of 72 to 74, 70, 75, and in the extreme case, 65.5 to 68. But that would be a pretty large range on the downside. And then bigger picture, because we're still bullish, buyers can still be active on pullbacks into support. So overall, we are in a very bullish context, and for that reason, it's better to be more active on the long side, be more conservative and cautious on any short setups, because there simply may not be enough in the downside movement to justify a short. So you need to see some pretty clear signs indicating a failure at the recent highs, and there needs to be enough of a profit target and enough reward potential to really justify that trade. Otherwise, the more conservative thing to do, and the easier thing to do, is really simply to focus more on the long setups, look for conservative longs at the support zones, and as long as there's enough strength in this market, and we're not seeing any warning signs, then we could balance above 86.5 to 88.5, and holding above 86.5 to 88.5 could lead to an upside breakout and a move above 2095. So right now, the idea is that the market is stuck in this range up here, but overall the context is very bullish. So if we hold above 86.5 to 88.5, buyers are in firm control. If we break below it, then 79 to 81.5 can get tested, and buyers can still be active there. And we want to focus more on the long side, unless there are very clear-cut signs that this is turning into a very weak day. It wouldn't mean that we're in a weak market. It would simply be one day where there's a bit of profit taking and a bit more of a pullback. But right now, given how bullish the overall market is, any pullbacks would still be buying opportunities, and I expect buyers to be active on first test of pretty much every support zone on the way down. So those are the main ideas heading into the open. Let's see if the buyers can maintain control today, and we'll take it from there.